Hello there, Trading Mavericks. This is Rob Reinhold. It is the market roundup, October 15th, 2024, and we had a pretty nasty down day today. In this session, we're going to be talking about some of the news that caused that. We're going to take a look at some of the sectors. And then, as always, we're looking for trading opportunities. Today, I've got one bullish setup and two bearish ones.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, let's start off with the news of the day. Now, the first bit of news that came out after the bell yesterday, probably about 4 or 5 hours after the bell. Remember, we had seen oil spike all the way up into the high 70s out of fear that Israel was going to attack Iran's oil facilities. And that's been a threat hanging out there on this market, keeping oil up in that 75, 78 area. Well, overnight, basically the news came out that Israel agreed, okay, we will not target the oil facilities, we'll just target military things. And immediately, the price of oil came down about 4%, and we're now sitting back in the low 70s. This really hurt the energy sector. We'll see that here in a second. We also got some earnings. We got earnings from companies like Johnson & Johnson, where you see that they gapped down and then closed up higher. And then we had Goldman Sachs gap up, close lower. We also had Citigroup gap up, close lower. So look, it was a mixed bag. It was a mixed bag where we really can't point to market weakness as the reason that these stocks went down. And the last thing, we got some news of the night that the U.S. government is looking at limiting chip sales of high-end AI semiconductor chips overseas, and that caused the chip sector to drop pretty sharply. The SOX index, which is the semiconductor index everyone tracks, it was down 5.3% today. So an ugly, ugly day when it comes to chip stocks. If we take a look at the Dow and S&P, they're both down 0.75 of a point. And look, when we take a look at the day, the Dow and S&P are basically flat for the week. So they basically just gave up their gains they saw yesterday. However, the Qs got hit. Qs got hit pretty hard. And the Russell bucked the trend. The Russell actually was up at 1.5% today. It sold off, closed down, but still closed positive for the day. You can see the big sell-off in oil and gold is just hanging out at all-time highs, really doing nothing. Today, the advanced decline line was slightly negative. Well, you can see that we're still at a pretty healthy amount of stocks above the 50-day moving average. So look, there's nothing really to point at on this day that's really nasty. Now look, it is a bearish engulfing candle. There's no question about that. And when these happen, you typically get a couple more days of selling. It's not always like that. We could point out some other bearish engulfing candles. We got one back here after running to a high. And you can see we treaded water for about a week after that and then went down. This candle, we need to see a big red candle or a sell-off continuing tomorrow. If we get an up candle, then this candle really didn't mean anything. It was just a candle. We could ultimately pull all the way back to 57.70. That would be totally acceptable. Totally acceptable. And it would still remain a bull market. So anyone who's looking at this candle and saying, oh, throw in the towel, that's it, the bull run is over, I think you're jumping the gun, technically speaking. Now that might end up being true, but as far as using technicals to make all your decisions, it is way too early to say anything about that. Jumping over here to the Qs. Yeah, ugly day, ugly candle. But guess what? Still made a new swing high. Still moving averages are both rising. Everything about this chart is still bullish, but we could see another day or two of a pullback before we bounce. On the heat map, you're going to see two intense spots of red. Semiconductors got absolutely hammered. Now let's just think about this. The Dow and the S&P were down 0.7%. If you take a look at the worst performing stock on the Dow Jones Industrial Average, it is United Healthcare. Now, UNH was down 8.1% today. The Dow is a price-weighted average. So meaning the larger the price of the stock, the more of an effect it has. Look at United Health. It's a $556 stock. So that means it's 10 times the weighting that a $50 stock would be in the Dow. So of course the Dow was down. This is mostly UNH. But you take UNH out, the Dow is probably flat. And then if you come over here to the S&P and you say, okay, well, how big of a part of the market is this? I don't know exactly, but I'm guessing it's 10%. 10% of the market. If you take a look at all this area right here with the software stuff included, you might be looking at, 15% of the market. That may be most of the losses we saw in the S&P. And then you come over here to energy and you can see energy is nasty as well. So big red spots there, but everywhere else, it actually was a fairly decent day. It was mostly a flat day in my opinion. So we took a look at the charts. We saw that big red candle, but nothing changed. We're still at a +3 market. So let's go in and take a look at some potential trades. I've been showing a lot of bullish trades over the last month because I've been overwhelmingly bullish. I am now going to show you one bull, two bears, but I do not want you to think that I have shifted from a bullish mindset to a bearish one. That's not true, but at some point, you have to start layering on some bearish trades. And if we get some more selling, it would be nice to have a couple in your back pocket. So on the bull side first, Carvana. This has been on my list for a long time. I love stocks like this. Then when the markets go down, they flatten. When the markets go up, they run to new highs. Look at this. Today's candle was a green candle. It was a beautiful candle. There's nothing that says that this stock is ready to roll over, even though it's had a gigantic gain from 125 all the way up to 195. The chart is telling us there's still some gas left in this. So for me, looking at this, I'm looking at easy trade like a 190 to 195. That's not really even asking this thing to break out much. That's just a really easy trade. If you want to be more bullish, then I think a 190, 200 bull call spread about 3 weeks out makes a lot of sense. Now, the first of the two bears I've got here is VST, Viasat. Now, this is a stock that is in what we call the March of Death. And what these things do, they fall, and then they have a big short squeeze rally, and then they fall and fall and fall, and then they base sometimes, and then they fall again, and then they base. Basically, you just want to get short these things. However, we have to understand that at any time, these things are heavily shorted, so there could be a short squeeze like we got in the 1st of September. So when we're down here at a low, now I love to try to get these on the pop. One of my favorite things is these big downtrending stocks. When they have a pop, to grab them here. Those are great entries. But other times you want to get entry, it was like a breakdown of a base. You can see here we've got a little breakdown of a base, but as long as you give yourself a little bit of time, these things are going to work their way lower. So looking at where this is now at $10.76, I think a 10-11 put spread makes a lot of sense. It's going to cost you like 40 cents. You've got 60 cents of upside. If it does pop up and run, guess what? You're in a spread. It didn't hurt you at all. If it keeps falling, as long as you gave yourself enough time, this trade is going to be nicely profitable. And then the last one here, I've been watching this Elf Beauty for a while. It's been in a big low base. It did break out a little bit ago and then recovered. But again, this is what I'm talking about. These pops, these are great entry points for these really weak stocks. So this went from 100 to 117. That's a 17% rally in 5 days on a super weak stock. We got our nice candle here, red candle tomorrow. This thing has got some downside. Now, I'm not going to go all the way down to 100 because I'm still pretty bullish this market. So I don't want to be super bearish on any of my trades, but a 105, 110. You're probably going to get about, well, if you're doing a put spread, you'll pay about $1.70. That means you got a 330 upside on this one with ELF. All right, let's talk about tomorrow. I've had this up for a little bit. The markets, I think, are likely a slow, steady grind higher until the elections. Now, if any of you have heard my talk about August trading I also say is a slow, steady grind higher. But what I say is, what happens is every now and then you get this 1% or 2% down day out of nowhere. And then it creeps up and makes new highs. And then we have a -1%, -2% down day out of somewhere. And these are tough to trade because those down days will kind of wreck your trades temporarily. And people tend to freak out on those temporary sell-offs. But if they just had patience and had enough time, the markets haven't broken down. They haven't done anything, any technical damage whatsoever. It was just a painful day if you're overly long. That's it. I think that's exactly where we are. Same kind of trading. I think by the end of the week, I think we'll be up. Right now, we're flat. We had an up day yesterday, a down day today. We're flat on the week. I don't see any reason why we're not up 0.5%, up 1% by the end of the week. We do have import prices tomorrow. That's not a very big report. I think you can pretty much ignore that. But we are in the heart of earnings season. So make sure that you are checking earnings. Make sure that if you have a position that has earnings going on during it, that it's a limited risk position on that earnings report. All right, that is it for the Market Roundup. Thanks for joining me. Goodbye, everybody.